Welcome to CryptoBanter.com. I'm Crypto Man Run, and today we're looking at a market correction. Well, is this a healthy correction, or is there something more to be worried about? Well, we're going to be looking at the graphs, the charts, and the fundamentals, and we're going to make a call as to whether or indeed there is nothing to worry about. We're going to look at the best way to trade this, where you should put your orders, what altcoins you should be buying, and a whole lot more. So you've got to stay tuned for that. And then, with all the Tether FUD going around, Paolo Arduino, the CTO, says they delivered 2.5 million pages of documents to the SEC or to the New York Attorney General. And he says, quote, everything is fine. Well, if he says everything is fine, then everything must be fine. And then if you do follow us on Twitter, you would have known that yesterday I broke the news that Dan Larimer had left Block One, the company behind the EOS protocol. With Dan leaving, is there any reason to be holding the EOS protocol? We're going to take a look at that. And then in our altcoin segment, we're going to be looking at an altcoin gem. In fact, it's my biggest holding, and that is Arweave. And today, talking about censorship and talking about big companies censoring presidents, this is an important part of the decentralized web. So if you like this content, hit the like button, hit the subscribe button, because that is how we get our content to more people. And the more people that get our content, one, the more crypto grows, but two, the more your bags grow. And that's literally what you're doing. You're actually growing your bags by sharing this show. So hit the like button, hit the subscribe button, hit the bell button, because that bell button is what tells you when we are going live, and we go live at different times every day. In fact, just yesterday, we did an emergency show because we thought there was news that you guys needed to know. And that emergency show covered that gold buyers, institutions, were now moving into Bitcoin over gold. And that's a serious market shift. If you missed that, go to the YouTube and look at that link. It's a picture of Peter Schiff. And that's seriously one that you don't want to miss. It talks about a complete restructure of the market and how Bitcoin could probably 10 and even 15x from here. So once again, if you do like this content, hit the like button, hit the subscribe button. We're going to be back straight away, and we're going to start with the content. So stay tuned.
Crypto Banter is the world's first interactive social cast for the crypto community. Get the latest news, views, interviews, and live conversations with crypto enthusiasts from around the world. This is where you call in, you make the show, and you bring the banter. That's CryptoBanter.com, where you talk crypto.
Yeah, that's CryptoBanter.com. That's where you talk crypto. And remember, if you want to join the show at any time, this is exactly that station. We're a decentralized station. And we know that you guys have actually got more information than us. And given that you do have more information than us, you can call in. How do you do that? Well, it's very, very simple. All you do is go to www.cryptobanter.com and go to the log into the studio page or call in page. And that will bring you direct into the studio. And remember, guys, you can remain anonymous. You don't need to reveal your identity. You can join us as an avatar. We want your information. We want you to tell us what you're buying, and especially at a time like this when the markets are correcting. So let's get straight into it. We're seeing a correction, and if you've been watching our show, we've been calling for a correction for a while now. In fact, the last correction that we saw, which you can see on this chart right over here, was about a 15 or 20% correction, and we weren't convinced that that was enough of a correction. And the market continued to go parabolic. And parabolic markets are dangerous in nature because it means that people are climbing in, weak hands are climbing in. And I'm not sure about you, but over the last week or week and a half, I've had people that haven't phoned me or contacted me for years contact me and want to talk to me about buying Bitcoin. Now, that reminds me very much of the beginning or March, April 2017, when everybody started to get into Bitcoin. The 2017 market then continued to rise. And if you look at what we've posted here on the screen, look at this chart. It shows that we had multiple corrections. We had one correction around September where the Bitcoin price went from 5,000 all the way down to 3,000, which is a much bigger correction than the one we've seen today. It's about a 40% correction. We saw another one in November, December. We saw many of these along the way, all the way up. And, you know, these corrections are healthy corrections. I want to show you guys a few charts, and I pulled out a chart. I pulled out the Bitcoin chart. Let's have a look at the Bitcoin chart. Even though we are going parabolic, it's not the time to jump ship because these things typically continue. And in fact, what I wanted to show you, and I'm sure Big Cheds will show it to us because he's coming on next, is I wanted to show you guys other parabolic charts. And I think one of the very, very good parabolic charts is, of course, the Tesla parabolic chart, because that shows that no matter how high we go, it doesn't mean that we're going to come down immediately. And what you should be looking out for is you should be looking out for the big moves. Now, if you remember last week, we had some big moves in Bitcoin. We had like $3,000-$4,000 candles all the way up. We smashed through the all-time high, and then we started to come down with $1,000, $2,000, $3,000 candles. What that effectively means, it means that the weak hands are getting shaken out very quickly, and the buying is becoming obsessive. We're getting to a point of extreme obsessive buying, and usually when that happens, a correction is on the way. But as I said, I think that this is just a correction. I think that you should be trading this smartly. What do I mean by trading this smartly? Well, for one, look at all the altcoins that you wanted to buy and you said that already run, and start buying those altcoins. I'm going to go through a list of my altcoins in a bit. If you want to get into Bitcoin, if you want to get into Ethereum, well, now is a great time. Don't wait for the bottom. Start buying it on the way down. Put in orders all the way. I put in some orders today at 34,000. They got filled. I put in some orders at 33,000. They got filled. And I'm going to continue to buy Bitcoin on the way down. And the only reason why I can do that is because on the way up, I started taking profits. So this is a great learning curve. If you are holding today and you are starting to stress, my advice to you is to just hold. Don't get shaken out unless, of course, you're on 100x leverage or on big leverage and you're very worried about the market correction. Don't let go of your coins. Every time I have done that, I've landed up buying the same coins back at a much more expensive price. We've seen these corrections before. This is nothing. A 20% correction or 25% correction is nothing. In 2017, we saw much bigger corrections, 30, 40, 50% corrections. What you need to look for is how quickly the market recovers. And what you'll notice, and what I'm putting my money on here, is that the market will recover quite quickly and we'll be talking all-time highs very, very, very soon. In fact, if you look at it, the fundamentals haven't changed. In fact, the fundamentals are better than ever. The Democrats are coming into power next week on the 20th, and then they're talking about a $3 trillion stimulus plan. Well, where is that $3 trillion stimulus plan going? Well, I can tell you, it's going to devalue currencies. It's going to devalue the US dollar. And when the US dollar gets devalued, where are investors going to run to? They're going to run to Bitcoin and gold. And if you watch the gold price on Friday, the gold price went down while the Bitcoin price went up. And that is because our thesis is that big institutions are moving money out of gold and into Bitcoin. And if you missed that show, that is one show that you have to watch on our YouTube page. You have to watch that show. It was important enough for me to come on a Sunday and tell you guys that it's happening. And that's because I interviewed 3 or 4 analysts from some of the big banks, and they unanimously said that it's actually people moving out of gold and into Bitcoin. And a lot of them were in disbelief as to how quickly this was happening. So nothing's changed. I mean, we haven't seen any bad news. There's been no FUD. China hasn't banned Bitcoin again. Tether seems to be solvent, or at least that's what Paolo Arduino says. And this is just a market that's run too much too quickly. The weak hands got in, and as the market started to collapse, the weak hands got shaken out and the leverage hands got shaken out. And so I think this is nothing to worry about. But then again, it's not only about me. Let me bring in my guest, and that is, of course, Big Cheds. You guys loved him on Friday. I had many requests to bring him back. So here he is. Cheds, tell me, what do you think? Am I right in my thesis that this is just a correction?
Hey, thanks for having me on, Rand. I love it. Yeah, so far it's a correction. You raised a lot of interesting points. One thing I want to touch on is kind of the emotions of it. You talked about stress. I think if you're stressing, you're probably trading without a plan, or you're trading with too much money that you can't afford to lose. So that's something you want to kind of factor in. Of course, we can look at the chart. We can talk about technical analysis, but you want to also be aware of kind of emotional analysis, your own trade plan. So, you know, if you just woke up and you saw a big drop and you started chasing it, trying to buy the bottom, there's all the volatility, you're getting stressed. You know, that's a tough thing. It's something that takes a long time to deal with. But if you have a plan, if you had scouted out some areas on the chart that you thought were value areas, and you were comfortable that you'd want to buy, you know, when it gets there, you should stick to that plan and kind of go there. You know, I think obviously we can talk again about the fundamentals and the technicals, how we got here. I think we're seeing a dollar rally, Rand. I think that's putting pressure on equities. That's putting pressure on Bitcoin. And we have kind of a long-term downtrend in the dollar. And that works with what you were saying earlier. all the stimulus, all the money printing, that's a tailwind for Bitcoin. That's going to help it go up. But the dollar's having a temporary bounce right now. That's putting pressure on Bitcoin. We've been in the RSI 95 range on the weekly for a long time. These corrections, these consolidations are excellent opportunities to flush out some of these short-term buyers. But no matter what, we still have a supply imbalance. There's just not enough Bitcoin. More Bitcoin's being taken off every day, put into cold wallets, taken out of circulating supply, and that reduces the available trading float. So actually, every dip, it's actually more likely that every dip will bounce, just because there's just less Bitcoin every time. So people still understand it's a hedge against inflation. It's a hedge against the dollar. We're seeing normally gold would be bouncing stronger. And like you said, some of that money's going into Bitcoin. So I think Bitcoin's got a lot going for it. You have to be able to buy these dips and hold red a little bit. Of course, have a stop loss, but you have to be able to feel the volatility if you want that upside. You can't just buy and then feel no stress. I mean, there's nothing like that. What does that? Nothing, right? So that's what I think.
I want you to call up the chart, and I want you to show me on the chart why you're not stressing, and also when you would be stressing, because at some point you got to concede that, hold on, we're dropping too far and there's actually a market reversal. It doesn't feel like that. We've been around for a long time. We've seen that. We also know the market fundamentals. Fundamentally, I can't see any way that Bitcoin doesn't go to 200,000 or 300,000 by the end of this year. But that's devoid of something big happening, like new legislation, like the Biden administration completely banning crypto, which I think they won't, because they are quite warm to crypto. Let's look at the chart. I'm gonna bring it onto the screen over here. Tell us what you're looking at.
We can look at a daily chart. We can go to a weekly chart. I think on the daily chart, we should at least recognize we've entered a slightly different phase. Really, for quite some time now, we've been consolidating without the need for a correction, because we've been riding this upper Bollinger and riding this moving average support. And we've had, in that process, these several thousand move dips that were bought up. And that consolidation allowed the price to remain in this kind of power zone here in the daily. And what's interesting, if you look back, you had a period of maybe 30 days, or whatever that period is from October, about 30 days where you were in the power zone. We saw the price double. And what's interesting, we actually had a similar phenomenon here. Again,
I just want to give our viewers some perspective here. People are complaining about the size of this dip, and we went from 42,000. We're down at, if I look at your screen, about 33,000. But let's remember that this is the same level that we only broke for the first time 5 days ago.
Yeah.
And that the market, we broke the all-time high of 20,000, and we've since doubled in 20 days.
So yeah, it really depends when you got into the market. But most people who are getting into Bitcoin, they understand the digital future. They understand that dollars are being printed. They know the money supply went nuts in 2020. It's going to go nuts in 2021. It really depends. If you jump in at 40K, you should have already sold, because you should have had a stop loss. Every trade needs a stop loss, a thesis, a level at which your trade idea is going to fail. On the other hand, you have people who put $50 into Bitcoin every week, $100 into Bitcoin every week. That's fine. That's accumulating. That's hodling. That's understanding your long-term horizon. So everything has to do with time horizon. To put this move into perspective, we do have a 28% pullback. You can go down to short time frames. You can find all sorts of things to justify the idea of a potential bounce, all these lower Bollinger dips. We still don't have a higher low on short time frame. So that means we're still vulnerable. Anytime you have a drop, before you can bounce, you have to kind of have a support, and then a higher support. We don't have that yet. So we still have some vulnerability here on lower time frames. But it's a level where you can buy, you can scale in. We've got a little bit of price history, a little bit of a horizontal price history in this zone. So that's why we've kind of temporarily stopped the bleeding. But like I said, there's still some vulnerability in the short term. I'm still a buyer, though. Look at that first MA20 middle Bollinger Band tag. We still haven't even tagged the EMA 34. So in a lot of these uptrends, what you will see happen is you see the primary uptrend support, EMA 8. And then what will happen is you have these dips to the secondary uptrend, the EMA 34. There's really nothing to worry about in a macro scale unless we get some type of a moving average cross. We don't want the short term to cross the longer term moving average. We're nowhere near danger of that right now. We have the potential to consolidate sideways. We can consolidate down, catch a bid again at 30K, and continue on. That all remains to be seen. Before we kind of get ahead of our skis, we can jump out. We can look at the weekly time frame. We could recognize we have a steady movement of these green candles. We're now 6 days into this red candle, so we don't know what to make of this too much yet. Really just, 1/7 really of the way through this candle. But if we just kind of do that, we see we're still trading in the upper part of the weekly range. We really don't have any kind of real, levels that are near us that we can touch, since we moved up so far so fast, but we haven't pulled back yet. So we're in a nice little area at the upper part of the range. We're still RSI plus 70. It's a bullish setup in the long term. In the short term, there's a little bit of volatility. How do we play it? I think you still have to play it with a long bias. You have to understand the bullish tailwinds, which you talked about in your introduction, the fundamentals behind it. Tether FUD, all that stuff. I'm more interested in institutional accumulation, Ran. Like, that's what it's all about.
I mean, we got Michael Saylor, who was the Maverick. We got Square. But I think that, as I said in my show last week, 0.0000001% of companies have even thought about putting some of their treasuries into Bitcoin. This is on the back of a $3 trillion stimulus, which is coming into the market almost immediately. The dollar is going to devalue. You need to put your money somewhere, and they're going to start putting their money into Bitcoin. Cheers, I want you to listen to this. This is a video that was done with a gold bug. Now, this is a big gold analyst. Up until now, he's only ever called gold. Watch this video.
Started like that. But yeah, gold is getting pounded today. The one thing I would say to investors that are into gold is stick with it. This, to me, is a classic retrace. It had a great move up. It's seeing a sell-off. If you look at the chart here, you can see this channel that it was in, which is actually a bullish channel. And you broke above the channel. Now you're kind of back in. But keep an eye on this area here, because if it can close right around this, then I think this is just your run-of-the-mill pullback. Now, this is a big pullback to be run-of-the-mill, and I understand that. But the one thing to keep in mind is that, right now you have this panic into Bitcoin. And I'm a big fan of Bitcoin. But it is getting a little frothy. It's a little insane. Just the last time you had me on, I think it was around 22,000, and that was just a few weeks ago. So we're basically double that. And I think you have a scenario where investors are saying, and this is kind of not the longer term holders, but the shorter term investors are saying, why am I in gold when Bitcoin is going up 5% every single day or 10% a day?
What do you say when a gold analyst talks like that? I mean, this is a guy who's a big institutional gold buyer, and he's basically saying, look, we're all FOMOing into Bitcoin. All the institutions are FOMOing into Bitcoin.
See, in that is kind of the implicit admission that Bitcoin's a digital gold. It's the implicit admission that you have kind of a similar retail and institutional base that is looking to use that as a hedge against inflation. I think gold potentially could go a little bit lower. He drew a diagonal. I maybe would draw a horizontal 1760, 1770. But I think both gold and Bitcoin offer an opportunity to hedge yourself against what comes next. I mean, look at the craziness of the last week. We could have more instability, but things like the scarcity of Bitcoin is really going to make you feel comfortable about holding on to it. And you talked about like the government maybe, regulating it. Regulation's good. It allows for adapting to a new system and survival. And they're not going to like ban it out of existence because you have insurance funds loading it. You've got potentially corporate treasuries down the road going 0.5%, whatever. Like, it's here to stay. Bitcoin's here to stay. If it's not, you'll never see me again. And I'll go work at Wendy's or something.
It's definitely here to stay. In fact, Grayscale announced over the weekend that pension funds and insurance funds were actually starting to buy into their Grayscale trust. Now, when that happens, I think that Bitcoin has enough regulation, and I'm not a big fan of regulation, but I also know that the more regulation we get, the more these big institutions can bring money into Bitcoin. And I think that when you're dealing with money, when you're dealing with such large numbers and being able to transport such large numbers of money around the world so quickly, there's no way to avoid regulation. I actually think that Bitcoin is going to be more regulated in the banking industry at some point, because larger amounts can move around the world too quickly. And that makes governments uncomfortable. And if you live in La La Land and you think that governments are just going to go away and we're going to beat governments with Bitcoin, I don't think so. In fact, later on in the show, we're going to talk about the only people that can beat governments, and that is, of course, the social media networks. So, Chets, when do we know that it's time to buy? How do you set your buy targets? Maybe if you can get your chart back up and maybe give our viewers a bit of a look as to how you make your buying decision. And while you are putting your chart back up, I do want to remind our viewers that we've got a giveaway for you guys. Yeah, we're going to be giving away 1,000 Cardano, 1,000 ADA tokens. All you have to do is go to our Telegram group, and my producers will post a link to our Telegram group on my Twitter, which is at CryptoManRun. And then you just have to participate in the show, like, comment, share, and then you could stand in line to win some of the 1,000 Cardano tokens that we're going to give away. We're going to be giving away a lot more than 1,000. We're going to be giving away Cardano tokens and other tokens all year long. So join our community, join our Telegram group, stand a chance to win. I will post the description in the link underneath as well, just to help you guys, and join our community, because that's where we break news. All right, Cheds, back to you, back to your chart. Tell me where I should be buying.
So, I mean, it depends on your time horizon, Rand. I think what you want to do is start to look for things that may provide some information. So I talked a little bit about kind of RSI theory before and how we kind of hung out in this zone. And you'll notice something called a swing failure, where at this point, the RSI attempted to break back into the power zone. You see how the price was kind of rejected there. So what I'm going to be looking for is at some point, we're going to kind of catch a bid, a more sustained bid. It may or may not have already happened, but we're going to attempt to re-enter this power zone. Do we get another what is called a swing failure, or are we re-penetrating the power zone? Should we re-penetrate the power zone? You should probably have some confidence we're going to resume this uptrend. It's kind of a low time frame time where if you're looking to scalp it, you're looking to trade it. I mean, at this point, you could enter with your thesis, use the recent low as your stop. That's a pretty big gap. That's already, what is that? Couple $1,000. So you go low time frame. What are we doing? You say, okay, there's a nice little candle, lower shadow candle. Maybe you want to be a little more aggressive. And you say at some point we need to put in a higher low. Will that higher low be at 32.4? Okay, you enter here at 33 with a 32.4. That's fine. But you have to recognize we have some downtrend momentum where we have kind of a falling resistance lines. You can look for potentially some type of a recapture of that trend line. Once you recapture that trend line, you have to start to recapture these key lower highs. So if you're a conservative trader, maybe you mark that 36.4. You say, I recaptured 36.4. I'm going to go up. Maybe even protect your long-term holdings with a short-term short. Maybe you have a long-term hodl in Coinbase or wherever, and you're leverage trading, and you say, you know what, if we break 32, whatever this is, 34, I'm going to enter small leverage short. Like some people, take out puts to protect against their long position, something like that. There's a lot of ways to approach this, but what you want to do is start to mark levels in the chart, which would make sense, at which you're going to see a momentum shift. Okay. All the while understanding the long-term bullish bias of Bitcoin. There's just not enough. There's not enough for those who want it. Could we go to 20K? I mean, I doubt it, but that would be an unbelievable buying opportunity. It really depends.
When you say doubt it, if I were to put you in the spot here and say, Chets, call the bottom for me here. Call the bottom of this little correction. Based on your charts and based on probability, where would you say the most likely bottom is? Now, obviously, you're not a fortune teller and something else may happen, but let's look at, where do you think that the bottom is going to be here?
I'd say I would be surprised if we break the EMA 8 on the weekly and some of this support around 28K. I think we start to lose the lows of the high of the 21st week and the lows of last week. So I would say probably 28K. I would become much more defensive bias at that point. We break that 28K. We're probably going to 20K because we have a big pocket. There's that quick acceleration without time to pause and consolidate and establish any type of a horizontal level, a consolidation level, which you can kind of test back on the way down. I'd say 28K would probably be the bottom for me. If we do not rally here, we're in a situation where we're looking for divergence on lower time frames, ideally the on-balance volume divergence with a higher low. We're still kind of chopping around. The RSI is doing its thing, little oversold bounce. Bulls need to show me a little bit more to have confidence, like I said, breaking these lower highs. I think you've probably got a 1 in 3 chance of holding here and a very good chance of holding at 28K.
All right, so you're saying that the maximum bottom that you think, I mean, it obviously can go lower, is about 28. That's on Bitcoin. Now, are you looking at any alts? Because I must say, I've been using this correction to top up on the alts that I missed. I mean, one of the alts that I missed was Zilliqa. I don't know if you've got the chart of Zilliqa, but Zilliqa is trading at about 58 cents. I was waiting for an entry point. I had an order in at 60 cents. My order got filled. I see that you are looking at it over there. Yeah, so for me, Zilliqa was one that I went into now. I think that's, again, it's an alt that I think has a lot of potential.
Sure.
It's a sharded blockchain. It's very, very fast. And I think that, again, I've been watching it for a while. I also started to go into Bird. I went back into Ori Protocol. All those ones that have taken the big hit, I've said, look, this is the time for me to start buying, and I'm layering my buys all the way down. So I'm not buying all at once. I'm buying in 3 or 4 or 5 tranches as the price goes down.
So let me show you how I would mark up something like this. And of course, as a bull, let's say at a bullish bias, I'd see this and I'd think, okay, I'm looking at some type of a bull flag. Oops, that's the wrong one. I'd say I'm looking at some type of a bull flag where I have kind of this sharp advance. Right. And remember, in classical charting teaches us the sharper the advance, the more likely the continuation. We have kind of a falling we have a bull flag, which is a correction within a bullish trend. So I'd say, okay, there's my thesis as a bull. I've identified this kind of lower support and falling resistance. And I'm seeing here we have a little bit of a horizontal confluence of support as well. So if you were a dip buyer, you'd say, I have a pretty good thesis. I can buy here at this level, 53 cents. That was the prior resistance from back in December. If I kind of catch a bid, we rally here, we break through, I have a really good chance for a new leg. So that's a real kind of a bullish interpretation. What you want to do is step back, use these indicators to kind of confirm your thesis. In charting, you don't want to use the RSI, the OBV to generate a trade idea. You want to use these things to confirm or to add some light to it. So what I see via the on-balance volume, which is an index indicator, which is a tally, adding up the red and green volume, are people buying, people selling? I'm seeing strength. I'm seeing that I have a pretty good chance of rallying here. However, Rand, what I do want to recognize, if we have a gap here, essentially kind of a liquidity gap, where if we break 53, we're probably heading down to 40 cents. So you have kind of these tiers. You want to understand the tiers in the price structure where really this whole bull flag thing starts to fall apart if we lose 53 cents, because the flag can't go forever. It really shouldn't exceed more than half the length of the flag pole. And you have these key levels horizontal. We break there. We're probably going to 38.40. We have this key level where the price was rejected initially. We did some type of an ascending triangle consolidation and broke out. Overall, I think this probably has a better chance than not to bounce if we continue this uptrend. You've already reset the RSI quite a bit. You have the hidden bullish divergence to some extent where you have a lower low in the RSI versus the price, suggesting continuation. So all in all, this looks like a fine place to kind of look for a value and buy into an uptrend. You don't want to be guessing where a downtrend is going to reverse, but you do want to be trying to look where an uptrend will continue. So that's my thoughts on this one.
Okay, let's look at Cardano. A lot of people in the chat are saying ADA, ADA, ADA. Let's look at ADA. I know you were a big fan of the momentum of ADA on Friday. Obviously, things have changed. 26 cents, 25.6 cents. What do you think? In or out?
Let me just switch to a different server with a little bit more price history. I had a different. So ADA is actually quite bullish. And what you want to be thinking about is, generally speaking, you want to be playing. We have Bitcoin, and when it pulls down, when it comes down, Rand, it pulls these alts down with it. And then what you want to be looking for to play is the ones that were bullish before, because they have the best chance of continuing. I'd say ADA is one of them. Let me just, again, I'm sorry for wasting the time. Let me get the right chart. There it is.
This is the most valuable part of the show, man. And if you guys want anything else charted, in the comments, let us know. I see Litecoin, I see Cardano, I see. So come on, let us know what you want charted, and I'll get Ched to chart for you. We've got time for one more chart after Cardano. I want to do this chart, and then we can do one other chart.
So you have to recognize ADA is not going to bounce here if Bitcoin tanks. Okay, that's just the bottom line. But if Bitcoin catches, it's really Bitcoin's the king, and that's why people ask me what should you put your money in. I usually say Bitcoin. But if Bitcoin tanks, ADA's going down with it. I think what I would do is have a contingency. So should we break, I'm going to be a strong buyer, 18, 19, 20 cents. I still think we have a pretty good chance of hitting that weekly target that we talked about, that 38 cent target, and we kind of came pretty close to it, 35. Here in Kraken and other servers, you see there was a 38 cent target from a couple years ago. So I still think ADA has a pretty good chance to hit that target, but we do want to recognize we have a little bit of a consolidation and a breakdown. So, a bear can always draw a broken uptrend line, but you can draw one right there. You can draw your rising demand line broken. You're pulling back. You're looking for support. It's not exactly clear where support is, but you do have a little bit around 25. Rand, I think if we break 25, we're going to hit 20. It's one of those things like I talked about with your last one with ZIL is you want to recognize these kind of zones of consolidation, these levels. You break through, you consolidate, you make a new level, and hopefully that new level will kind of be your stair step. So an ideal scenario for a bull would be you break down, you catch a bid here, you have a nice consolidation, and you can kind of continue on. But you don't want to be ready to buy down here. I think we still have a good chance to continue. We have the RSI resetting. That's fine. The OBV shows still plenty of evidence of accumulation. I still have a slight long bias on ADA.
Okay, last one that we're going to do today, and the crowd has gone crazy, and they're saying dot. So let's do dot. I'm looking for an entry into dot. I was looking to enter at around $6.50 or $7. Not sure it's going to get there. Let's look at what you say.
So if you look at dot, on the last time I had you on, I actually mentioned a potential buy zone for dot, and we're actually right there. I had identified a good way to play it is to identify a level you think it probably won't hit, or some type of a support level within the uptrend. I had actually mentioned right here at 780 would have been a time to buy in. So if you had kind of followed that advice, you would have scaled in. You would have had take a little bit of a heat, maybe a little agita, a little indigestion, perhaps on that 7-1 test. But we have, you want to think about a thesis. You have a reason, rationale why it could bounce here, because you have this prior consolidation zone. We have kind of a bull flag, or again, an ascending triangle that had broken out. So these prior levels of digestion often serve as support. You also do want to recognize a little bit of that volume trend. So we had little bit of the volume trend break here, which suggested the pain. We got the pain. We caught the bid. We're going to zoom out, look at our indicators. We see the RSI reset. That gives you the ability to potentially go to a new leg. If you catch a bid here, you see really no warning signs in the on-balance volume vis-a-vis really strong volume on these red candles. So one thing you want to note is you want to look at the volume on these red candles for clues as to kind of the strength of the pullback. Is it a market-wide pullback, or is it a dot-specific pullback? I don't see a dot-specific pullback in this case, which leads me to want to be a dip buyer. I mean, I'm cheap, so I like to buy cheap. This has a pretty good chance to bounce here, and it also has a pretty good level you can set as your stop loss, right around 7-1. So I would actually, I don't know if I'd buy right here. I might buy a retest of this area. So you potentially already would have zoned in, or you're potentially looking to retest that low, remembering a generalized concept that the best entries often come from retests of a retest of support, like an attempted bounce, and you come back and you test it again. That's what I look for, those types of retests.
I agree. And I think that this is an amazing entry point for dot. Cheds, before I let you go, and I'm going to let you go now, the market was scared of the Tether FUD. Do you think that there is FUD? Do you think there's anything to worry about?
I don't know. That's like asking me to sing to you in Brazilian. I can't do it. I don't know about that stuff.
Try. Come on. I've got to hear.
Obrigado da bom dia.
Before you all leave the stream because of Cheds singing, Cheds, it's been a great pleasure again. You're becoming a big hit here. Everybody here in the comments is commenting that they keep wanting you back. So thank you very much. And now we're going to talk about the Tether FUD, because we said that the Tether FUD is something that could bring down the market. And if you remember, the New York Attorney General attacked Bitfinex and Tether and said that Tether wasn't 100% backed by US dollars. Well, this weekend, Paulo Arduino came out and he said, look, we had a deadline of the 15th of January and we delivered. We delivered 2.5 million pages of evidence to the New York Attorney General. So he says it's business as usual. He said Tether is 100% backed. He doesn't say 100% backed, but he says backed. They're working towards more transparency, and that is something that Tether has been missing for a long time. Strong KYC and AML and weekend purchases explained. I'm going to try and get Paulo onto our show. In fact, I spoke to him today on Twitter, and he said he would probably come onto our show. So I'll try and get him on, because I think he's got a big insight as to what's going on. And I think once and for all, we need to understand what this Tether FUD is all about and whether we should be worried about Tether. Now, also remember that there's a lot of other USD coins. And whereas in the past, or in the beginning, when Tether was the only one, it was much tougher for them, or in fact, it was much easier for them because they could do whatever they wanted. But now there's other competitors. There's USDC, there's all the other ones that are in the market, and they are growing in value. So I think Tether is going to have to come to the party. They're going to have to be much more transparent about what they're doing, maybe even provide audit reports. And then I think this FUD will go away. And remember, this is big FUD, because this could have taken the market down by a hell of a lot. I mean, there's a $20 billion market cap on Tether. And the last time when we found out that they were unbacked, it hit the market pretty hard. All right, so if you are watching this on YouTube, hit the like button, hit the subscribe button, because I'm going to move on to the next segment now. And that is the one about EOS. Guys, if you don't follow us on Twitter, and I'm at CryptoManRun, and the station is at @crypto_banter, you're missing out. And the reason why I say you're missing out is because we break stories on Twitter all the time, and this is no different. We broke the story yesterday that Dan Larimer is leaving Block 1 as CTO, or has left Block 1 as CTO. And when that happened, the price of EOS went down very, very quickly. So you could have made a trade. You could have sold your EOS. You could have shorted EOS, but you could have made a trade. We called it at $3.90, and the price has gone down to $2.60. So there's the trade there. Now, why is this so significant? Well, Block 1 raised about $4 billion in what was the biggest ICO of 2017. And they did this to build the EOS.io protocol and to build an ecosystem around it. Now, we are 3 years later after their launch. There's not much going on with the EOS.io protocol. In fact, they launched The Voice. And The Voice is a social network, which is a decentralized social network, which they promised big things on, but they didn't even launch that on EOS.io. Now, I'm starting to have a problem with this. I was one of the original investors in EOS, and I have a bit of a problem with this because they raised a lot of money. They used the money and they bought over 140,000 Bitcoin. Yeah, you guys, you heard this right. Over 140,000 Bitcoin. Now, that means that their holding today is worth about $40 billion. The EOS market cap today is $2 billion. And I have yet to see anything amazing come out of Block 1, specifically on the EOS protocol. And I think it's time that these guys do it. For now, I can't really see a reason to be holding EOS. EOS has been an underperformer in the market. To me, it's a very much a 2017 chain, which is not fully decentralized. Now, in 2017, if a chain wasn't decentralized, that was fine. But we are moving into 2021. And now we have a whole lot of these decentralized chains. We've got Elrond, we've got Cardano. And I don't think that there's much space for a chain, even though it's very fast, that is not fully decentralized. And if there is going to be a space, then it better be in building the ecosystem around it. And with $40 billion, you guys better start showing us what you're doing with the $40 billion. Until then, I'm not a big buyer of EOS. In fact, I wouldn't touch this thing. I was a very big holder. I sold all of my tokens. And I'm not going to tell you guys what to do, but do your own research. And maybe you guys are going to do the same. I really see no reason to be holding a token that does something like that. And now, especially because their superstar CTO, Dan Larimer, said that he is leaving, and he's going to pursue what they said were personal interests. I imagine, knowing Dan Larimer, that no personal interests, but we'll see another chain coming out of Dan Larimer soon. Remember, he was the CTO of the Steemit, or he was the founder of the Steemit blockchain. So yeah, let's look out for what he does. So let's move on to the next segment of the day, and that, for me, is the most exciting segment, and that is because this is my biggest holding. Yep, this is my biggest altcoin bag, and this is a protocol called Arweave, a file storage protocol called Arweave. So why am I so excited about this file storage protocol, which has very, very, very little hype? Well, let me tell you why I'm so excited. If you do have Arweave, tell me in the comments. If you don't, hit the like button, hit the subscribe button, and get yourself some Arweave, because I'm going to tell you why my thesis is that Arweave is my best call for the altcoin market. It's got no hype. It's not one of these tokens that's going to 10x in a day. It's a slow and steady coin. And in fact, if you look at the price of Arweave, the price of Arweave is up today when most other tokens are down. And that says something to me. That says that this is a very solid token. It's not a hype token. It's not going to double. But it does fulfill a very, very important need. And that's because today we're living in an age where the sitting president of the United States has been banned from most social networks. And what this shows is it shows that these big platforms, they can do whatever they want with you and with your data. One day you're on Twitter, and the next day you may be kicked off Twitter. One day you have data on Google or Microsoft Azure, and then they may not like your data, and your data may be gone. And this brings into this limelight the need for decentralization. And if you look at what the tech companies have done in the last couple of days, what they've done is they've flexed their muscle. And they've showed the world who's actually got the power. Is it the president? Or is it these big social networks with a network effect? Well, quite clearly, we can see that it's the latter. And these social media companies really control the narrative. In fact, when was the last time you heard anything from Trump? And that's because he really has no platform to talk. And this is a sitting president of the United States. And the same can happen to you. Your data may be taken by Microsoft Azure. Your data may be taken off Amazon Web Services. And that's why, for me, the decentralized web can't come fast enough. And if it's going to come, we need file storage. Because file storage is a massive market. File storage today is a $150 billion market a year. And the big players in the market are Microsoft Azure, Amazon Web Services, and of course, Alibaba Cloud. In the decentralized world, the decentralized file storage companies include Filecoin, which raised over $257 million in their ICO in 2017, and they recently launched their mainnet. You've got Storage, you've got SIA, and then, of course, you've got Arweave. Now, whereas Filecoin, SIA, and Storage all go head-to-head with Amazon Web Services, Microsoft Azure, and Alibaba, they all charge per amount per unit time, or they charge per contract. And Arweave has a completely different approach. Arweave charges a once-off fee and stores your data forever. And so they call this the Permaweb. And there are no other file storage players in the world that are targeting permanent storage. In fact, Arweave has a complete monopoly on this. Now, if you want to know what the advantages of file storage are, well, of course, it should be cheaper, because what you're doing is you're storing files not on a centralized node, but on a whole lot of nodes. And you're using excess capacity. And theoretically, that should make file storage rates cheaper. But more important than that is it prevents censorship, because you can store your stuff forever and it's decentralized and no one can delete it because it's stored on some kind of blockchains. So who would use this? Well, the first application for Permaweb, or for permanent storage, of which Arweave's version is called Permaweb, is storing internet data. Now, if you're like me, you thought that internet data was stored forever, and it's not. In fact, 90% of the internet's data is deleted every 20 years. That means that if you thought that the information on the internet was safe, well, actually, it's not. So the first use case of permanent storage, or the Permaweb, is actually storing the internet. Then let's move on to blockchains. Where are we going to store all this blockchain data that we need to store forever? Well, Arweave has started to integrate into some of the bigger blockchains, so it has real-world adoption. Let's look at one more use case, and that is journalism. If you look at journalism today, a lot of journalists risk their stories being removed. And in some countries, and even in the US, a lot of stories are getting removed. And these are stories that are researched by journalists and just don't match the narrative that the big tech companies or the governments want them to match. And so a big use case of the Permaweb is, of course, journalism. So Arweave already has a lot of adoption. And if you look at their adoption, they've got protocols like Scale and Solana who have already adopted the Arweave protocol. They've also integrated into Uniswap, into SushiSwap, and into Yearn Finance, or into Yearn Finance. And so this project really has adoption already, and people are starting to catch on to it. Now, let's look at who's behind this project. Well, the project was founded by a guy called Sam Williams. Now, I know Sam, and he's one of the smartest guys you've ever met. And the project was backed, and it was backed by some of the biggest names in crypto. In fact, it was backed by Andreessen Horowitz, Multicoin Ventures, and of course, Coinbase Ventures. And that's led everybody to believe that maybe Arweave will be listed on Coinbase soon. Now, I think that Arweave may actually be listed on Coinbase, not only because Coinbase Ventures invested in Arweave, but also because it's a real project with a real use case, and the token is definitely a utility token. The one downside they've got is that they've only got 66 million tokens in circulation, and those aren't circulated amongst the big crypto community. In fact, this project doesn't really nurture a big crypto community. They're much more focused on actually getting their tech built and getting their use cases into the market, as opposed to creating hype. And that's why most people probably haven't even heard of Arweave, and those that have struggle to buy the tokens on these illiquid exchanges. And that's because the big VCs are holding these tokens tight. No one is ready to sell them. In fact, Andreessen, Coinbase, and Multicoin bought their tokens in a recent round where the valuations weren't that different from where the rounds are today. Let's look at the valuation of Arweave. So the valuation of Arweave today, let me call up the Arweave file. The valuation of Arweave today at a token price of $3.53 on a fully diluted basis is just $233 million. And whereas we don't know exactly how to value crypto tokens yet, let's look at one of the competitors, and that is Filecoin. If you look at Filecoin, Filecoin has a fully diluted market cap of $45 billion. Now, that means that Arweave is trading at about 0.5% of Filecoin's market cap. 0.5% of Filecoin's market cap, you're taking a great bet at $230 million that Arweave may actually succeed. And if you've been watching their progress, they've got the right investors, they've got real world adoption, blockchains are already starting to use them, and their protocol works. What they're lacking is they're lacking all the crypto hype. And I think their thesis is that they don't need the crypto hype if they're going to succeed. They'd rather get their project working and people actually using their tokens, and that's how they're going to get real world adoption. So this is the one that you may have missed or may not know very well. I hope I've shed some light for you. It is my biggest holding, so full disclosure, I hold a big bag of Arweave. I love the protocol. I wish they would do some more crypto marketing so all of you would get to know about it. And I wish they'd list on more exchanges, but I guess that will come very soon. So with that, I'm going to remind you again of our 1,000 Cardano giveaway. All you have to do is like, you have to subscribe, you have to bell button, and you have to hit all. There's a big reason for that, because if you don't hit the bell button, nothing is going to happen. To the people in the chat, I see you, blockchain. I see you saying Sam is smart. He says VCs will dump. I don't think the VCs will dump. They've just bought, and they bought it at a price very similar to this. Let's have a look what else is going on in the chat. The ETH killer EOS has been eaten. I don't know if it was ever an ETH killer. I think it was a 2017 excuse for a blockchain. In other words, in 2017, when we couldn't scale and our technology wasn't there and we didn't have the Elrons and the Cardanos and the Polkadots of the world, EOS really filled a big gap. Today, I don't think they've filled such a gap. There is an open invitation to anyone from EOS, Brendan Bloomer, anybody from EOS, to come and prove me wrong. Come and tell me that I'm wrong. I'd love to be wrong because I was a big EOS fan for a long time. Like I said, today I'm a big Cardano fan. I'm using this opportunity to buy a whole lot of alts. In fact, let me show you guys what I am buying in this dip, and you guys, of course, make your own decisions. Alrighty, so as I mentioned, I'm buying Zilliqa because I think the price has gone very low, and this is a good blockchain for me. I am topping up my Bird position. Bird is that Oracle protocol that we spoke about. And they were on our show a few weeks ago. That has come down to about $23.95. I'm a buyer at anywhere near $20. Pickle is my DeFi pick. It hovers between $10 and $20. It's very, very, very close to the $10 mark. So I'm buying. Anything else that I'm buying? I'm looking at Omisego, OMG. If Omisego hits $2.50, I think I may start nibbling. That's a great position for me. Ocean Protocol, if that gets anywhere near 30 cents, I'm going straight into Ocean Protocol. And I guess those are my altcoin picks for today. Guys, be careful out there. Watch the market. Even though I think it's going to recover, there's always the chance that we're going to go a bit lower before it recovers. Ultimately, we're in a bull trend. The fundamentals are amazing. My thesis is that it's going to recover quickly. Let's hope it does. In fact, let's hope when we meet tomorrow it does. So I'll see you tomorrow, same time, same place. That's 10 a.m. EST, right here on CryptoBanter.com. I'm Crypto Man Run. It's been amazing trading with you. Until tomorrow, trade well, my friends.
Crypto Banter is a social podcast for entertainment purposes only. All opinions expressed by the hosts, guests, and callers should not be construed as financial advice. Views expressed by guests and hosts do not reflect the views of the station. Listeners are encouraged to do their own research.